The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 1st. How about that, folks? June 1st, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is just fine, 877-927-6648. Of course, you can send me an email, steve@tfnn.com. Just in that heading, put radio show question. That'll work. And, of course, inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trade up 91 points, trading out of 21,099. S&P is up 13 points, 0.5%. Trade out of 24 and a quarter. NDX 100 up 18 points, 0.3%. The Russell 2000 on fire up 1 3/10%. That's trading up nearly $18. That's trading out of 13.88. We've got the semis are trading off just a tad. New York Stock Exchange up 0.7%, up 79 points out there. The transports are up 1.2%. The transports trading to the upside. The Russell trading to the upside. The semis not. I don't know if it's a mixed bag necessarily, but we'll take a look at that bag. You've got the VIX index, spot VIX index down 14 pennies, trading out at 10.27. We're certainly going to take a look at that. Gold is off $9. Silver's down 18 pennies. Light sweet crude is up 62 cents. Leading the charge here to the upside dollar-wise, you've got Palo Alto Networks up $20 or 16%. Nice move there. Priceline is up $15. AutoZone is up 13. Affiliated Manager Group up $7. That's 5% to the upside. To the downside, Public Storage down 1 3/4%, only $3.77. Equinix down 3.60. Broadcom down 3.50. Analog Devices 3.5% to the downside, or 3 buckaroonies out there. First question coming in is from our Gator inside the Tiger's Den. Wants to take a look at the IWM. Let's look at it on a couple of different perspectives if we can here. Let's first take a look at the Russell 2000 equity futures contract. And let's look at the 30-minute chart. Let's start narrowed, focused in, and then we'll go ahead and expand out. So we take a look at the bottom that formed yesterday morning inside of the Russell 2000. That was as a market pushed lower into about 10:30. One of your favorite candles in mine, that's a hammer candle, indicating to us that the market was trying to hammer out a bottom. Well, in fact, we can see that it has done that. If we take a look at, in fact, if you look at just the black lines on my chart out here, black horizontal lines, those are our 30-minute TAS market profiles. Each of those forming very nicely. Right now, this says that any support on any retracement is at that 1379.90, 1386, and 1380.6 happens to be Stevie's oscillator unchanged line. So that should be a pretty decent level of support. Will it even come into play? I don't know. But we can go take a look at other patterns that are out here that say, hey, you want to be paying attention, such as, for example, it's very possible. Let me do this here. Let's go ahead and see to the downside, make sure we've got where that's. So it's right here, that little C point. So we are either in the 7th wave move to the upside or the 2nd wave move to the upside. 7th waves, where you can, in this case here, letter G on my screen, is where, in fact, you can see significant changes in trend. Doesn't mean you will. Says that you can. So the antennae that come out of our heads out there, the antennae are up because of this specific pattern. But again, Gator, I'm looking at a 30-minute chart out here. Now, What other patterns can we use to identify or project price? Well, clearly the A to B equals CD pattern, a little lightning bolt pattern. Let's come from the bottom of the hammer. Let's go up to where we formed a swing point here at about 8 p.m. last night, 8 or 9 p.m. That's going to be our B point. And C, very simply, is going to be at the low down here at about 8 o'clock this morning. And we can see that price has now made the 1-to-1 A to B equals CD. No bearish reversal signal, no nothing, just in wave number 7. What's likely to occur here is a move to 1393. We're at 1387-ish right now. There is a 10-minute delay on this chart here, so I'm going to be off just a tad. But without any kind of bearish reversal signal, the next level that should be attained is 1393. Now, oftentimes at the completion of an A to B equals CD pattern, you do something different out here. In this case, this is most likely a Gartley sell pattern, but we don't know if it is or it isn't because there is no such sell signal as we speak just yet. That is what's going on the 30-minute chart. Now, let's go from 30 minutes up to the daily time frame. And we go to the daily time frame here. What we're going to do is we're going to switch over and take a look at the, we'll see 4 different time frames. What I'm going to use is my stitched together equity futures contract. So we'll pay attention to the daily and the weekly boxes. Then we'll come over and take a look at the current contract for what's going on a 240 and a 60-minute chart. What this suggests to you and I, Gator, is that price should make its way up towards 1398. I'm looking at the daily chart. We'll explode this up on our screen here. That is the top of the daily box. We know that the center of the box, little cyan color, is closer to the top of the box. This says that sellers should be lined up anywhere between 1381 and 1398. If we go back and take a look at that price projection, by the way, inside of that A to B equals CD pattern, let me pull this back here because we didn't show the 1398 level. We will now. That is the equivalent of a 1 to 1.618 A to B equals CD to the upside. So on a 30-minute basis, we're at or nearing. In fact, the next candle could easily be a Tom DeMark sequential count, number 13, that is out there. I won't really know until I see how this half-hour chart candle forms, which for me will be about 140 or so, right, because of the delay, the 10-minute, 12-minute delay inside of the Russell 2000. But it's not unthinkable to see price get to 1398. Now, above 1398, and that says that the character of the Russell 2000 has changed. Otherwise, it's just headed up to a resistance area. If we take a look at the weekly chart, 1397 and change happens to be resistance. So if we take a look at it, that is where price should find resistance. So you've got a 1 to 1.618 A to B equals CD up on a 30-minute time frame. On a daily and a weekly set of TAS profiles out here, you should see significant resistance out in that area. And that, folks, is the Russell 2000. Wasn't the IWM, Gator, but give me the high sign that that's okay, because I'd rather take a look at this information because it's got the better of all the patterns out there and gives us those next price projections. You can do the math on this to figure out the difference between 1386 and 1397, about 10 points, and try to figure out where the Russell 2000 might head to. This is Steve Rhodes with TFNN. We get back from this break. I'll check the email, see if you have any requests out there. We'll check the Tigers Den as well. And if not, we'll just go on and do our thing. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 104, S&P's up 13. So with no questions in hand, let's continue going through these charts here that help us to identify what the markets are doing, levels of support and resistance that we want to pay attention to. And let's begin by taking a look at the daily equity futures contracts now for each of the four markets that we follow. The ES Mini upper left, the NQ upper right, lower left is the Dow, lower right is the Russell 2000. There you're going to see that 1399 level that we had talked about. Now, bad news for the bears is that the ES Mini is trading above 24.1775. That should have been strong resistance. Thus far, it has failed. Why do I say strong resistance? Very simply, if we go ahead, this is a brand new box that had formed out here. If we go ahead and we turn price off, what you're going to notice, what I notice, is the top of the box and the center of the box are closer to each other out there. It says at 24.1775, the sellers should have been able to take out all of the rush by the bulls. That has not happened. When you close above a structure that is bearish, well, that just turns things to a strong bullish message. Watch the price point at today's close in that 24.1775. If you close above that, the message is very clear from a daily perspective. It wants to run higher. We'll take a look at where the S&P 500 could run higher. The Dow really doing the same thing at this stage of the game. The Dow here formed a brand new profile. This is earlier today. The top of that box is 21.095. Now, the weekly, I think we're not too far away, but 21.095. We'll go ahead and we'll take a look at that. So closing above it, and that too was a bearish structure. We'll go ahead and turn price off. Well, I didn't want to turn that off. Let's turn price off. And you'll see, again, a bearish structure that has been overtaken by price. So a strong bullish message. Now, if I switch back over here and take a look at the Dow equity futures contracts, let's use Stevie's stitched together version, as that's going to give us the better date out here. You can see the price is trading right up into the level that it should be trading into. That is the top of the weekly box, that level 21.118. We're trading at 21.123 as we speak right now. So we're right up into resistance. Is price going to fail here? I don't know. It wouldn't surprise me that it were to fail here. But, does it have to? No, it doesn't have to. But this is the area where if there are any bears left that are snipers out there, this is where they would be sniping away. Now, let's go take a look and say, is this move real or not? Let's go play the game of liar's poker out here by taking a look at those divergent patterns that did exist before but don't exist now. Yeah, you know it's Stevie's favorite equal-weighted ETF. That's the Guggenheim S&P 500 equal weight right now today at a new all-time closing price, right? We're looking at a line chart out here. That would be the top panel of my chart. That's the blue line. Today's the first day above the previous high that is out there. If price closes above today, the price level of 92.27, RSP, by the way, that is the ETF for the Guggenheim S&P 500 equal weight. That would be bullish, and it would be confirming what we have seen out here for a matter of days, the weighted version of the S&P being at new all-time highs on a closing basis. Right now you're at 242.87. So in this case here, it says, hey, guess what? That move we just looked at inside the ES Mini, yeah, that's a real move out here. There's no reason for price not to move higher. We don't really have to take a look at the QQEW and the QQQ, although I'll get punched up on my screen out here. Both are at new all-time highs, so there's no divergence here. So all is well in equal-weighted ETF land out there. Now, where is it that the S&P 500 could move to? Well, all we have to do is come take a look at our horizontal trading range levels. We're trading out at 24 and a quarter out here. At 24.76, another 50 points higher becomes the next weekly, because these are green lines out there. You probably didn't know that. We're looking at a weekly chart. Green lines on this chart refer to weekly horizontal trading range levels. And because we're above the midpoint, being 23.91, there is no reason, if we get a nice close coming into the session and today, that 24.76 should not become the target, or somewhere right around there. In the case of the NDX 100 as well, let's go ahead and finish it off. She's got about another 70 points or so to the upside. 58.05 is what we're trading at. 58.72 and change is its next weekly horizontal trading range boundary line. And if we go take a look at advanced decline data out here, at least the one that takes a look at the daily data over the last 39 sessions out here, we're going to see that that advanced decline oscillator reading, well, that is above zero in the New York Stock Exchange. That's above zero inside the NASDAQ Composite, and it is still above zero inside of the Dow. However, and there is just one caveat emptor, is that how you say it out there? And that is the VIX index out here. And that is this. We're now beginning to see, and I don't know what it looks like at the end of the day, and you know how I hate to say that, but there are times when you have to say that. I'm saying it just in reference to a point in time versus what most people use it as. But at the end of the trading session, let's go ahead and put our green lines in here. Why green? I don't know, but we're going to go ahead and do it anyways. You can see we're moving to higher ground inside the S&P 500. Don't know where it's going to close, but as we speak right now, we are. And we are making higher bottoms on a closing basis inside of the, whoops, that was the wrong tool to grab out there. That did not allow me to do what I wanted to do, but you can see it right now. We do have right now, I don't know what it'll look like at the end of the day, but a rising bottoms pattern out here. Look, you're always going to have some kinds of divergences out there. What we have to do is really take a look at those that have the most meaning out here. And I'm going to put this one in. And the way that these divergent patterns work is you cannot use those as signals. Instead, you have to use things such as tops of market profiles, A to B equals CD patterns, including the bearish reversal signal, in this case here, because we're talking about price moving higher, price relative strength divergent patterns, a time to mark count, either a setup 9, either a sequential or a combo count out there. And then, of course, you must use Stevie's red line to go ahead and put all that together. So is the S&P 500 out of the woods right now? It is not, as far as the volatility index goes. You see the other green lines that are on my chart, and you see that you can't really use those necessarily as timing signals, but they did let you know that there were problems in River City. And as we speak at 1:25 in the afternoon, as far as the S&P is concerned, there is some trouble in River City. It's all going to depend on the close. And there is your market. Now I'll go ahead and put these ETFs up here on the indices out here because Gator did ask about those. And this way here, as you take a look at it, you'll have, let me just go ahead and expand this up on the screen. You will go ahead and have all of their TAS market profiles. And what you're going to see here is the Q has a little bit of resistance at 141.84. The SPY is above daily, is above weekly. The Dow, bottom right-hand corner, is above daily, is above weekly. And the IWM, the counter trend rally, if that's what this is, should find resistance at 138.68. You're at 138.34 out there. And them there are your index ETFs. Dow traded up 118, 124. S&P up 14. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Question inside the Tiger's Den from Kaz. If we can go take a look at silver. So let's go do that. Let's do that with looking at it in a couple of different ways out here. Let me get up the silver contract. Where are we at here? Give me a second to do that. Hey, you watching those America's Cup races? They're on live right now. You keep one eye on them, and then the other eye on me. That's perfectly fine out there. But what a beautiful thing that is. Now, I don't know what's going on with France, but They look to be somewhat dead in the water out here. So, but I just flipped it on. I remember that they start at 1 o'clock Eastern time, even though I tape it just to really watch it later, but might as well have it on. So if we take a look at silver, let me do this here. I'm going to show you a chart as opposed to being just simply a babbler out there. That's not going to do you a whole lot of good. And here's what we know about silver today. Right now it's trading out at 17.26. It was a beautiful thing. Don't you think, Kaz, as it moved down lower out here today, did you wonder what was it doing? And then you said to yourself, I bet you that little silver contract out there is doing nothing more than testing Stevie's red line. And you would have been right if that is exactly what you said. So getting down into that 1697 level out there, it didn't hit that right to the T, but close enough for our game. All price was doing is getting back to test Stevie's oscillator on change line. Now, if you close below that level, that is a bummer. It's a real bummer. Why? Because then what you would have is a falling oscillator below the zero level. Price oscillator. That's the very bottom panel of my screen. If you just simply take a look at that tool, and right here we're taking a look at the difference between 19 and 39-day exponential moving average. So that's what we're going to use to determine our price oscillator. Great tool to use, by the way. Many of you use it. This is just a different way for you to go ahead and use it. And so as we take a look at it, it's 1969 that's going to be important, because if you close below that, when price is falling and you've got a falling price oscillator. Right now it's rising below zero. So it just says counter trend rally at this stage of the game out here. If it starts to fall below zero, it's a real problem. It's a real bummer. It would say that price would come back and test the prior swing points, right? We always look for those swing points. You got a hammer candle way back here. This hammer candle, which was tested, rejected back in December, looks like December 20th, 2016. That really becomes the price target in the 1580-ish type range out there. But you must see it close below 1969. Otherwise, today was nothing more than a test of support. That is what that chart shows. Now let's go take a look at the market profiles out here for silver. And as we do that, we're going to go ahead and put Stevie's Etch-a-Sketch contract out there. That way we can look at the what I will call little but slightly more reliable data. And here, basically, silver has a couple of different pictures. Let's go short term. Let's go reading left to right. Left to right, what we can see here, it has gotten slightly bullish from the standpoint, and I'm talking about 60-minute chart, in case I didn't say that, because price is now up above the resistance level of its TAS market profile. 1717 was the number. And this was actually a bearish structured box. That point of control slightly higher, slightly closer to the high versus to the low of the box out there. So this says, okay, more counter trend rally. Well, if there's more counter trend rally, then to where? The 240-minute chart says that the resistance, which was old support, should be 1733. So I would be watching 1733, Kaz. And what else is at 1733? Not a darn thing. At 1766 is where you have the weekly. And this is a brand new weekly that formed here just last week out there. So 1766 would become a real potential resistance level out there. So that is what's going on inside of silver. Closing above 1766, well, then you can say it's found its mojo. Now, let's do the same type of analysis for gold out here, right? We can't look at one without looking in the other. And if we do that, then I'm just going to get letters of complaint, and we do not want any complaints out here. So let's go take a look at gold. Let's go take a look at the August contract. Let's go take a look at Stevie's red line. Still really, nothing has changed from yesterday, but you knew that. But if we take a look at it, what you're going to see here is that red line figure, 1261.80. We're at 1269 right now. So that's where price would need to close below to start making that sphincter muscle tighten a bit. At this stage of the game, gold still looks bullish out here. Now, if we go take a look at profiles as well, let's use the Etch-a-Stitch contract out here. Let's go take a look at, let's go left to right, right? Just go left to right. We're going to see here that gold is likely going to try to target 1271.70. We are trading at 1269 right now. 1269.70, by the way, happens to be a relatively comfortable price area for gold. But if it can get above that, you're looking at about another $2 price move, 1270, 170. You'd like to see gold get above that level. That would be short-term bullish. That would just add to the bullishness of the 240-minute chart, when earlier in the day, all price did was come back and test a strong level of support. Why strong level? Because the center of that box closer to the bottom. So as price got down in the 1264, 1263 range, that became your buy target area if you like using that 4-hour chart for your signals. No reason to not like it. Daily basis, showing just simply those green sticks out there, those green shoots. So that's bullish. That confirms the prior chart that you and I looked at with my other system. And in the weekly chart, says that gold has some stiff resistance in the 1280 to 1290 area. And as you and I looked at yesterday, you get above that 1290 area, you're going to break through a long-term descending trend line, let alone above a structured bearish market profile. And them there is gold in, I guess I should have said gold in them there hills, right? Kind of screwed that up. Oh, well, let's go. So hopefully, Cause, that assist you with whatever it is you're looking at inside of gold. Let's go take a look at, somebody wanted to take a look at the yen. That was Danny in Hot Atlanta out here. Hey, Danny, let's go take a look at the futures contract. Is that okay if we do that? Instead of looking at the currency pair, only from the standpoint that we'll have some live action data out there. So hopefully that is okay with you. And if it's not, well, then I know that you'll go ahead and tell me. But we're going to look at it in, again, we'll just use those two different charting tools to help us identify key levels of support. So we'll wait for one. Why is that thing not turned over? That's interesting. Let's go. Let's start off. Well, let me just try it one more time. Let me see. Why? Oh, did I really do that? I probably did. I'm not going to tell you what I did, but basically, stupid. So let's take a look at the yen out here. Hey, there we go. Okay. And this one here, so you will not have noticed the actual pretty much dumb move that I made out there. Luckily, I only did it so that I could see it. I could have told you that I didn't, but I did. Hey, back to the Japanese yen out here. And as we take a look at it, you can see just like inside of silver, what we have here inside the Japanese yen is price having moved down to test that level of support. That level of support just slightly below 89.81. It is 89.69. 89.69 inside the yen. If it breaks below that level, Danny, that probably spells some trouble for gold and silver. But right now, really, it still is showing up as being bullish. That's the Japanese yen futures contract. Hope you're
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. One of our viewers, listeners, John in Sarasota, he could be skippering. He could be the skipper of that Team Oracle boat out there. Who's the skipper of that boat? Who is the skipper of that boat? Name's right on the top of my tongue out there. What is it? In any event, in this case here, it's not John, it's James or something like that, right? But he wants to go take a look at cattle out here. And the question was, what's the best way to short cattle? I checked, John, inside the Tiger's Den to see if there was any ETFs that you could use, and the answer was no, not a thing. If we do take a look at the live cattle futures market out here, we've got the Ellis, is that his name? James Ellis? Ellis? Is he the CEO? No. Maybe it is. No, I'm going to not doubt you. You put it in there. It just didn't sound right. But that's okay. A lot of things in my mind just never sound right. But let's go take a look at the daily contract out here for the live cattle. I know Ellison is the owner, or one of the owners, right? He teamed up pretty much with BMW, right, to build that thing from a high-tech standpoint. So I think they've kind of renamed it. I think that's what he did, but what's the name of this? In any event, would it not be cool to skipper one of those boats out there? Oh, my goodness. In any event, how about just to ride along? But let's take a look at the live cattle futures market out here. So, John, you're taking a look at going short here, and I don't know your time frames, but what I can at least provide you with is these market profiles out here. And this is the daily profile, and what this would suggest to me is I can't tell you whether going short is right, wrong, or indifferent, but live cattle should find support at 117.92. Now, I would say in looking at this daily market profile, the structure of this is bullish, not bearish. And price is just hanging out right at that point of control level. It's really trading just, it's really hanging right out at it. So this is the area where both buyers and sellers are most comfortable. The better place to have gone short this was up at the high in the 132 type range, 130-ish type range out there as that box was forming on a daily basis. But this looks bullish from this standpoint out here. So, and not saying that you would be wrong on the trade. I would watch that 117 area. The weekly chart is also looking bullish out here, and there's just not anything inside the 60-minute, 240-minute chart that's really going to assist you with that. So I hope that helps you out. We've got a newcomer inside of the Tiger's Den out here, and that is Jeff, maybe from Tennessee. I'm thinking the TN might be from Tennessee. And Jeff wants to go take a look at light sweet crude, so let's go do that for Jeff, and let's just say, hey, welcome to the Tiger's Den. Once you're in, you never can get out. Now, what we're going to do here, Jeff, see, there's some additional cow ETF. Is that it? Bill, Mr. Bill, we'll take a look at the cow ETF out there. We've got, so Jeff is looking at swing for a few days up to a couple of weeks inside of light sweet crude. And are you looking at it from the long side, Jeff? Is that what you're thinking out there? Just to kind of finish that up, I don't think you wrote that in here. We're going to just go take a look at light sweet crude. I'll let Jeff go ahead and type that into the, and then we've got stay away from cow, the ETF. So we'll come back to those. So you've got a 60-minute chart, 240, daily and a weekly. So when you give me the data, the information that says you're looking at it for a couple of, up to a couple of weeks, few days up to a couple of weeks, then that says, okay, we got to go take a look at a chart that would, in essence, give you that daily to a couple of weeks type signal out here. And what I can share with you is the following out here. Let me just pull this chart back. Let me see what we have here. So I'm going to go ahead and blow it up. This is a 60-minute chart. So on the on the 60-minute chart out here, Jeff, what we have when we take a look at these market profiles, and they're very helpful in assisting us as to what price is doing. What occurred here at about 6 a.m. this morning is a brand new market profile formed. And at the time that this formed here, this is the very right-hand side of my screen, price was actually just below that profile. Now, that should have been a very bearish message out here. Price was able to work its way all the way up to that top of that box, which is 49.07. That is resistance. You're trading at 48.97. What I want you to watch for on an hourly basis, so that means 13 minutes from now, and then the next hour at 3 p.m., and then 4 p.m., and so forth, is any close on an hourly basis on the hour above 49.07. Of course, that's with the information I have right now. These market profiles could form. A new supply-demand area could form at any point in time, but I just can only give you what it is I've got now. Above 49.07 would say short-term wise, there's a change in trend, at least enough to take you up into the $50 area. Why 50? Hey, why not? We're at 48.98, 49.07. Well, because it's a prior swing point out there from about 11 o'clock in the morning on May 29th out here. That's what I would be looking for. Now, that's what the 60-minute shows. The 240-minute chart here gives us another set of market profiles. This one here, bearish from the standpoint that it formed below the prior one, and the top of its box is basically where we're trading right now. And what we're trading right now, 48.97, the top of the box is 48.99. So 48.99 is a level. Now, that's a 4-hour chart out here. This 4-hour time frame does not come to a halt until 4 p.m., 2 p.m. What am I talking about? 6 to 10, 10 to 2. So watch that price. Now, you really need, if it doesn't close above that at 2 p.m., you got to wait, in essence, and see what happens at 4 hours later. It's really not that complicated. But at this stage here, this is still a little bit bearish. So we know that on the 4-hour, and we know that on 60-minute, price just really bumped up into resistance, right? So it has not given you that so-called buy signal. Now, let's assume the buy signal doesn't happen. We've given you the parameters where you would see a potential change in trend out there. If there is no buy signal, it's just been this little counter trend rally, then what you should anticipate is that what light sweet crude would do is get down to the bottom of its weekly box. And that number, to the penny, is 47.23. The low so far this week is 47.73. That is where you would go ahead and take a look at getting into a long trade out there at 47.23 inside of light sweet crude. Hasn't had a ton of movement in a long period of time. Well, that's assuming if you go back to November in 2015, you consider that to be not a long period of time. So your outcome, your reward risk inside of light sweet crude says 55-ish area is all you would get. Could be 56, could be 57, but that's really about it. So you're in a trading range out here, about a 10-point-ish type trading range, give or take a couple of dollars out there. And maybe light sweet crude isn't the best place for you to play around in that sandbox. But if you want to, 47.23 in that area is the move. So, Jeff, welcome to the Tiger's Den. I hope that assists you. One last thing that I could do out here. Yeah, why don't we do it? But we gotta do it. where it was just a request. Now, let me just do this here. Light sweet crude. Let me go find it. Let's go see where Stevie's red line is, because that certainly would be important. Let's see if we can find this here real quickly. We're going to have to do it when we get back from this breakout here. But, Jeff, I'll give you, for light sweet crude, one more data point for you to pay attention to. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 110. S&P is up 13 points. And for Jeff inside the Tigers Den, we're going to go ahead and just give him some red carpet treatment out here and take a look at just 2 more charts here just to assist with that trade. Now, if we look at the daily chart here for light sweet crude, you're going to see Stevie's red line. That's a number that price needs to get above. 49.05 is a number as we see it right now. You can see this nice little descending price channel that price has been trading within at this stage here. So no bullish message here. Watch that 49.06 level. Any close above that or 49.05, could send things up to the top of that descending price channel. If we switch over, because you were looking for something for multiple days, maybe a few weeks out there, and we take a look at the weekly chart, what we're going to see here is that when light sweet crude, this is a continuous contract, by the way, when it made its top out here, it did it with one of those 7th wave moves. Remember, we're looking at a 7th wave move inside the Russell 2000 when we began on this that was on the 30-minute chart works the same way for all time frames that mark the high out there. And since then, we've seen lower highs and lower lows inside of light sweet crude. The number here on a weekly basis, Jeff, is 50.52. You've got to see it close above that in order for any potential. I know you're looking at the A to B equals CD pattern. That could be out there. But be careful. So far, it has not proven itself. That would take you into the $65 area, and that is on light sweet crude. So let's go ahead and wrap up over the next couple of minutes out here. I don't see any other emails. Let's go back in the way that we began the show. We looked at because from weakness, we should see if there's any strength out there or just weakness. Now, we do have that Tom DeMark 13 count. 30-minute chart that you and I are taking a look at. Nonetheless, it has formed at least wave number 7, could be 2, but at least wave number 7 out there. And but you don't have any kind of bearish reversal candle. We could, over the course of the next few minutes, remember I have a 10-minute delay, so it really is 14 more minutes before that candle forms here. And what happens if you do? Well, then that says price moves down to 1382. You'd watch that 1382 number inside of the Russell 2000. What else are you going to watch for end-of-day fever out here? You're going to be watching those TAS daily market profiles. Any close below 24.1775 inside the ES? Well, that just tells you that the sellers did have control of the pricing area. That could take price down to 23.83. Likewise, inside the Dow, any close below, oh, shoot, where is that number out there? Let me see if I can pull it up. There we go. Any close below 20, I could have figured it out, 21.095 in essence would be a similar type of, we'll call failure as we would have inside the ES Mini. Are we going to get it? I don't know. But those are elements that you would be watching for. On the other side of the news, if in fact the S&P continues to trade around where it's at or even move higher and the VIX index doesn't move lower, we've got one of those diverging patterns that could be a signal of an impending retracement to come out there. But that pattern can't be resolved. We cannot use that. We do not use that as a timing signal. We just simply are aware of the pattern, and we look for some other pattern to confirm that out there. And then lastly, it's all going to be about the Guggenheim equal weighted ETF. That's the RSP ETF right now at a new all-time high, 92.75. That's confirming for you that it's not just a few stocks inside the S&P 500 that are doing all the weightlifting out there. Anybody that tells you that, well, just tell them they're smoking something that they shouldn't be smoking out there. Maybe drinking something that they shouldn't be drinking. They should come here to TFNN, to the Trader's Edge Show, maybe to Mastering Probability, and drink the water that we drink. Because this says, with the equal weight at new all-time highs, things are hunky-dory. Folks, stay tuned. Your favorite polar bear in mind, David White, is up next. After that, because of this terrific Thursday, you got Tom O'Brien and Andy Heck to take it on home. We'll see you on Fantastic, Fabulous Friday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.